Come on, what? There we go. Can you guys hear me now? Can you hear me now? Should be working. All right, there we go. How's everyone doing here this afternoon? Clearly, did not miss out on anything in today's trading day. Absolute chop fest out there. Everyone feeling good? Yeah. All right, so I got a couple questions here that we'll fire through initially. Once we answer a couple of these, hopefully you guys will have a few questions and we can continue to make this as interactive as possible. And yeah, let's kind of get after it. So let's go question number one here. What actually makes someone profitable in your program versus the people who fail? Is it the strategy, psychology, risk management, discipline, or something else? In my opinion, right, the foundational skill that you need to develop as a trader is fundamentally your risk management. Now, risk management can mean multiple things, right? That can be a max loss per trade. That can be avoiding trades that aren't a good fit for your strategy. That could be walking away when you're feeling tilted or annoyed. It could be a variety of those things. So fundamentally, best loser wins. That is what differentiates the winners and the losers in the program, and generally in trading all across the board. So, the reality is, and I think we've all probably tried this at some point or another, is that you simply cannot out-earn a bad risk management, right? If your average loss is bigger than your average win, you're fighting a losing battle. If you're constantly trading more than you should and you're giving away your P&L, you're swimming upstream, right? You're making things more difficult than you need to be. Once you have that solid foundation of risk management skills and you know how to basically walk away, right, when you're not feeling your best or when you've hit your number or you build that confidence, everything else kind of falls into place, right? Your trading psychology is fundamentally a reflection of how good your risk management is, right? Trading psychology is a proactive, not reactive thing. And the more proactive we are with avoiding our obvious mistakes, which is what risk management is designed to help us do, the more we can be in control over our mentality, our psychology, our psyche, however you want to describe it. And then from there, the strategy only works if we're consistent and disciplined with it, right? So if I'm willing to overtrade and I'm willing to oversize my positions and I'm unwilling to accept my losses, it doesn't matter if my strategy wins 99% of the time. I'll still find ways to blow up my account. I'll still find ways to lose money, and I'll still find ways to make my life more difficult than it needs to be. So fundamentally, the thing that makes someone the most profitable or the most successful in this program is being a good loser, managing that risk, managing that psychology, managing those structures. And once you create those scenarios, you put yourself in a situation where you can be successful. All right. Question number two. How long should I realistically expect for it to take before I'm consistently profitable? Is it weeks, months, or years? What would that time frame look like? So I think consistently profitable is a bit of a filler statement, right? Because what does that actually mean? I think consistency in trading is a consistency of actions more so than a consistency of outcomes. So if I want to be a consistently profitable trader, I have to be consistently following my rules, following my processes, following my strategy, right? Not doing the dumb things that overwhelm traders or put people into scenarios where it can be really challenging. And more and more time, energy, mental capital you give bad psychology, bad risk management, right? The more you live in that danger zone of poor discipline, the longer it's going to take. So, however long you want it to take is how long it's going to take. And that's not a question of like desire, it's a question of your actions. So, your actions tell me how committed you are to trading or how committed you are to the process, etc. And if we choose to, I don't know, want to make every mistake before we figure it out, yeah, it could take you years, right? If you choose to just follow the program, you shut off your brain and you stick to the system and you stop finding ways to overthink simple things, then there's no reason why you couldn't be profitable by tomorrow. And then the consistently profitable, well, I think that's the fight and battle that every trader has, right? Because I think being consistently profitable is kind of a forward-looking statement. And so the only thing that I can ensure that will allow me to maintain that discipline and that edge is for me to constantly follow my rules, stick to my processes, learn from my mistakes, and hopefully just improve and get better as a trader. So that's a you decision, right, on how long it's going to take. I think with the program and the way that it is structured, if you show up, you eat your vegetables, you do the things that you're supposed to do, there's no reason why it should take you months or years. It's constantly going to be slowed down, or your progress is going to be slowed down the more that you self-sabotage yourself. So if you want to be a consistently profitable trader, you have to find ways to stop sabotaging your progress. And that all goes back to question number one, right? Which is maintaining good risk management, maintaining, that best loser wins attitude. That's what's going to allow you to have consistency in your actions. And once you have consistency in your actions, that's when you can be successful. The starting point for most traders is that they are actually relatively consistent, but they're consistent at the wrong things, right? And when you are consistently willing to overtrade or ignore your risk management, you're consistently going to delay how long it takes for you to get your results. So no, I don't go consume other traders' content. Certainly don't go and consume traders who have been proven to be paper traders. I think that that's relatively foolish. But what I would say, Electric Outcast, is that for the vast majority of people, their bottleneck isn't a strategy, right? It isn't a technical lesson, right? That you're looking for when you're searching for that content. That's kind of like filler work, right? So the things that I would spend my time doing instead is looking at my behaviors and how they diverged from what I actually wanted to do as a trader, right? So if I told myself, hey, today I was only going to take 3 trades and I wanted to keep my max loss to be less than $500 on each of those trades. If I didn't adhere to those rules, why not? And what can I change to make sure that I do tomorrow? So most of the time, for the vast majority of people, they spend their time working on things that aren't actually going to move the needle. When people talk about figuring out the market, they're not talking about figuring out a strategy. They're talking about figuring out themselves, right? Figuring out the bottlenecks that prevent them from executing the simple concepts that actually make money in the market. So if you want to, get confused and have a million different ideas rattling around your brain and get that analysis paralysis, then sweet, go keep watching paper traders and their content and the scams that they portray. But if you actually want to become a better trader and you want to become profitable, you need to look internally and start answering why your behaviors deviate away from what you said you wanted to do. It's not a question, right, if you practiced any of them, right? But it's why would you fill your brain with things that aren't going to help you improve your trading when you already have the technical base level, right? Everyone here has the technical ability to execute the strategy. They just don't have the discipline or the self-belief or the structures internally to protect themselves from themselves. And then they look for another holy grail that's going to get them there. The holy grail is making your actions match your words. And watching more traders' content isn't going to help you do that any better. All right. Question number 3. And this is one we get every single week. So guys, write it down, right? Write this down in your notes. Because I struggle to comprehend how this keeps coming up. But what is the exact opening range breakout setups you trade? And what conditions make you skip a trade? What separates an A+ setup from a mediocre one? So I trade 3 setups, right? 3 to the upside, 3 to the downside. They're the same in both directions. And it's kind of sequential, right? So the first setup that I'm willing to trade is the opening range breakout, which is when price hasn't exceeded the upper end of the opening range or the lower end of the opening range. I'm looking for a separation away from that, right? So setup number 1 is the ORB breakout. Once an ORB breakout has happened, like we saw in today's example, right? And we establish a new high of day, then I can no longer look for the ORB breakout. I have to look for the high of day breakout, right? So in today's example at 9:32, we broke out from the opening range. That breakout failed. At 9:44, we got another breakout from the opening range. But because I had seen that setup already fail, I knew I could not take that play and had to then look out for setup number 2, which was a breakout above high a day, which is resembled here or shown here with the blue line, right? So a breakout through high of day then becomes setup number 2 once I've seen the ORB fail. And then setup number 3, right, is the reversal. So it's once I've seen the ORB breakout fail in one direction, right? I've seen the high of day breakout or low of day breakout in that direction. Then I know that I can start to look for reversals, right? And so reversals are generally going to occur closer to the red line than to the blue box, right? That's kind of the general standard. And I want evidence that breakouts have failed or that the enthusiasm behind the move has stalled out and that we no longer have momentum or enthusiasm. And it's reasonable to expect that the other side of the equation has now taken back control. I like to visualize price action as like a tug of war battle. And so if I'm going to be making any trading decisions, I want to be confident that I'm on the winning side of the tug of war. That's why it's important to look at this sequentially, right? ORB breakout first. If the ORB breakout fails, then you look for the high or low of day breakout. If the high of day or low of day breakout fails, you start looking for reversals, right? So you're basically doing 2 strikes, right, for the opportunity for the breakout. If those fail, then you start to look for a reversal of those opportunities because you see evidence of that tug of war switching sides or like more people being on one side or the other. What then makes an A+ setup or a B+ setup? Kind of a binary, right? If a trade is giving me an active setup condition, then I need to use confirmation to determine how strong that setup is. Confirmation for me is a binary. It's a yes, no. So if it's a yes, it's an A+. If it's a no, it's everything else. To make confirmation A+, I need a strong candle shape, which means that the candle, if I were to visualize it, is pointing in the direction that I'm looking to trade, or it's like a full body with no wicks. And I need to see increasing and outlier volume. So The volume, right, then helps me again visualize that tug of war scenario where I see more participants on one side of the rope than the other. And once I have a setup trigger and I see volume confirming that there's more participants on one side than the other, and I have a strong candle shape, then that's an A plus or binary setup trigger, and I'm willing to execute that trade. If I get decreasing volume or non-outlier volume, or I can't reach those binary conditions that we're trying to establish, then I'm unwilling to take that trade. A good example here, right, would be not a great one from today because it's kind of a trashy day. But this candle at 944 from Friday is a good A plus setup confirmation candle, right? So it's a setup breakout through high of day. It's a strong candle shape, right? Where the body is larger than the wicks. We have increasing outlier volume. And then we see price action just continue to climb higher for the remainder of the day. We've got clear evidence, right, that the tug of war has tilted towards the bull's favor, and it's easy for us to build and maintain confidence that our directional bias is going to be correct. And then those three setup triggers, right, are the same on both bullish scenarios and bearish scenarios, right? So it's exactly the same when we're looking to accomplish that narrative. So follow-up question here. Sometimes you combine volume from two candles to, in a sense, validate your thesis in a certain direction. When is it the right call to do that? So for me, I'm always willing to basically delay that decision if there's something about the trade or the candle that isn't quite perfect. So let's say that, again, we're going to go back to this 944 candle. Let's pretend, right, that its volume was the same as that 938. So we got a clear breakout above high a day. We have a really strong candle, but the volume isn't there. You know, maybe bulls were just hung over that morning, or they're taking a Wall Street lunch, or whatever it might be. If I've got, most of my criteria there, I can wait to see if I get more information that indicates if my setup is good or not. So if the next candle then prints me increasing outlier volume, right, and it gives me that scenario, I'm more than happy to use that candle as my confirmation, right? But fundamentally, that candle is going to have the missing piece that I didn't have on that previous equation. And because it's maintaining the same body shape, handle structure, and volume criteria that we're looking for, it just means that I'm resetting the breakout from high a day to be from the 942 candle, right, to now be a breakout and hold above the 944, right? So it's still that same high of day breakout. I just didn't get the initial look I needed. So I'm resetting, reestablishing the new high of day, and looking for the breakout through that zone. This candle, right, didn't give me anything that told me that my idea was wrong, but it didn't also give me enough information to see that my idea was correct. So I can just reset, and as long as I have enough space from a risk reward criteria perspective, then as long as I get all three elements on that next candle, there's no reason for me to be afraid or say, oh, I didn't get it on the high of day breakout at 944. So now at 946, I can't trade this anymore, right? So it's when I get 2 out of 3 things from a confirmation standard and the thesis looks like it's moving in my direction, but it hasn't quite given me maybe the volume or the candle shape or whatever I'm looking for. If I can get that to show up on the next candle, I've got no reason to panic about my previous setup trigger. Does that make sense? So it's always a clear reset, right? It'll always be the same three things. If I don't get the same three things on one time frame, right, I can switch to another. If I don't get it on like the 2-minute time frame, well, I can just wait for the next 2-minute candle to print. And if it shows me what I'm looking for, then I can reset and do it again. Okay, question number 4. What's the biggest mistake beginners make with prop firms? Is it over trading? Is it sizing too big? Is it revenge trading? Is it taking low quality setups, etc.? I think that the biggest issue or the biggest mistake people make with prop firms is they try to pass and get funded and get paid too quickly, right? And that then leads to them over trading or oversizing or ignoring their losses or whatever it might be. And yes, always, guys. The standard for confirmation is the exact same regardless of what setup trigger we trade, right? So confirmation is the same for every single trade. We're not cherry picking what we call as confirmation. It's the exact same for every single setup, no exceptions. So yeah, with prop firms, right? People will size too big in pursuit of trying to get rich quickly, effectively, right? So the issue isn't that they're not talented enough, is that they're placing their bets to be too large to prevent them from having any sustainable level of success. That's the issue. So people screw up the Kelly criteria, right, which is the formula for your optimal bet sizing. And then because their bets are too big, they can't survive the variance when it inevitably happens. Okay. Question number 5. How do I know if I'm actually improving versus just getting lucky? What metrics matter most? So this is a twofold question. So first of all, making money as a trader or being a profitable trader is a lagging indicator. You don't just start making money and then all of a sudden become a good trader. You become a good trader and then start making money. So it's important to quantify the correct metrics for your trading. Fundamentally, I think the most important metric is the size of your average win versus the size of your average loss. If your average win is $20 and your average loss is $150, probably not a very good trader, or you don't have a lot of margin of error in your decisions. So then the thing to judge yourself on, right, in getting better is your average win increasing and is your average loss decreasing? If you put all your energy and focus into those base statistics, everything else will fall into place. All right. Question number 6. What separates traders who eventually get moved to live capital from traders who get stuck in evaluations? So assuming, right, that you're passing evals, that's probably the right angle to look at this from. The difference is in the consistency of their equity curve, right? So if you're constantly getting to like one payout or two payouts and then blowing everything, you're sizing too big, you're over trading, you're over leveraging, and you're not a very good candidate to be pushed alive because you're not going to be able to survive that variance in the market. Again, right, going back to the Kelly criteria of ideal bet size for each individual trader. So that's the main difference, right? The traders who go to live can stay live and sustain that live pressure. They know how to size their bets so they can survive drawdown. Traders who get stuck in evaluation mode and just churn evals and basically hope that they get lucky, well, that's all it is, right? You can buy 5 accounts and get a payout on one, and eventually, you might keep breaking even, or maybe you'll get 2 payouts in the cycle or something along those lines, but it's not a very sustainable formula. If you actually want to be pushed alive and you don't want to be prevented from purchasing evals, it's all about sizing your bets properly. All right, what are the questions we have here? I've done 30 minutes answering my own. What do you guys have? Practice, right? So the only way you're going to get good at timing your entries is practice. Now, a lot of the thing that you can do here is to make it easy for yourself to focus on your execution timing by having everything set up before it's time to make a trading decision. So if, we're looking at a trade and you're ready to set something up, you need to start getting to the point where you filled out everything in your order entry window 30 seconds, 60 seconds, 90 seconds, right? Before you're ever willing to click submit on a trade. So if you're not scrambling to fill in your order details and to get your order of operations correct with your execution, then you'll be able to think and find that moment of calm that you need to actually execute your trades. So you got to get smoother with your operational skills. The only way that you can do that is to practice, and to practice aggressively. What else we got here? So when I say I'm watching here, right, or I say I'm looking for a gentle pullback or something along those lines, that is my indication to you guys that I am looking for my entry, right? So I am trying to give you an audio clue that I am looking to click submit as soon as it pulls into my entry zone and I find that moment of calm. Is the pre-market setup a micro trading perspective or a macro perspective? I guess what I'm asking, it doesn't tell you the general direction of the day's market. So that is what the 3-for-3 system is. The 3-for-3 system is telling you how strong the daily trend is, right? Is it trending higher? Is it trending lower? Or is it trending sideways? And then there's criteria for how strong it is, right? So a 3-for-3 to the upside or a 3-for-3 to the downside means that we have a short-term bearish trend or a short-term bullish trend, right? If I have a 2 out of 3 to the upside with volume, then I know that I've got mostly bullish trending price action. If I have a 2 out of 3 to the upside without volume, I know that I have weak trending price action. If I have a 1 out of 3 to the upside, I know I have a weak or a non-trending market. And then obviously you can zoom out, you can look at what price action is telling you, right? Like if we look at what price action is done from March 31st to May 26th, or sorry, May 11th, 2026. Well, that is clearly a squeeze or a trend to the upside, right? So you look at what the daily time frame is telling you, and then you use your short-term time frames to match up the same story. DC, I'm going to need much more than what you just wrote, right? You got to ask a question, not just throw words, please. Okay, what's next? What else you guys got? So exactly like I just described, right? If I have volume supporting my price action, right? So if I have a 3 for 3 to the upside, or a 2 out of 3 to the upside with volume, or a 3 for 3 to the downside, or a 2 out of 3 to the downside with volume, then my bias is to look to continue following that trend. If I have a market that has a weak trend as its foundation, then I know that it's more likely to be a two-way tape, and I should either be looking for mean reversals or breakouts to the opposite side, or potentially breakouts to the other side, right? It gives me a larger view to look at. Fundamentally, right? If I have a 2 out of 3 to the upside without volume, then I know that the missing ingredient for me to have trending price action is volume, right? I'm trying to use the shorter time frames to turn my 2 out of 3 into a 3 for 3, or my 1 for 3 into a 3 for 3. So if I'm missing something, right? If my pre-market prep is telling me that I'm without volume, then I need to see that volume return prior to me being aggressive, right? So if I have a 1 out of 3, that means I'm missing 2 ingredients for me to have trending price action, right? I'm missing both price action to move in a direction, and I'm missing the volume to support that PA. So the pre-market prep we do is telling us what we're missing and what we need to see once markets open. Understand? So if I have a 2 out of 3 to the upside with volume, then I know I'm waiting for price action, right, to tell me the same story as yesterday's narrative. And so I'm looking for a bullish breakout or a breakout through high of day or whatever it might be. If I'm missing the volume, then I know I need to see larger enthusiasm than what I saw there yesterday before I'm confident that I have a high conviction setup. No, I do not stream with Zoom. And yes, you can find the streams on YouTube. All right, what's next? Come on. Stack them up here, guys. Stack them up. Yeah, but look at the chart, right, Nautilus? From like September to March, we had just consolidation, right? It was just two-way tape. So you trade your system, you stick to your rules, you follow your risk management, and you survive until markets give you trending action. Yeah, the delay is 6 hours. No, like, come on. So how do I handle it? Well, I trade my system. I don't break my rules. I don't think that I'm smarter than the market, and I just play the math equation that is trading. There's always a smart sounding reason to not follow your strategy. You kind of have to be a dumbass and just trust that your system is going to work. A great quote from Dale Earnhardt Jr. I think it was Dale Earnhardt Jr. I'm going to keep my gas pedal floored or I'm going to see God. Right? He's talking about the Daytona 500. I know what it is with trading, right? I'm either going to trade my system and my strategy and trust that my math is going to work, and I'm going to be all in on doing that, or I'm going to see God. There is no middle ground. Hell yeah. Very happy to process that today. Congratulations. Let's freaking go. $1,500. That's a nice little reward. All right, what else we got here, team? What you want to get to, DC, right, is just like when I'm like say I'm looking at a trade, right? And let's just go back to Friday because Friday is a little bit of a better example here. Okay, so let's say that I'm looking at price action like this, right? The second I draw out my fibs, right, and I'm ready to go, even before I draw my reference price, I'm already filling in my stop loss location, right? So I'm going into my order entry window. I'm putting in 28,955 as my stop loss. And because my entry is always 10 points away or better from my stop loss, I know that I'm going to have the same amount of contracts like I always have. So I know that number, I can put that in. And then all I'm waiting for, right, is for either price action to behave nicely and pull into my reference price, right? Or for it to give me a different stop loss location that I then fill in and type in and reset that process. So the second I draw out my fibs, right, or maybe 5 seconds later, The next thing I'm doing is I'm going to my order entry window and I'm starting to fill in as many of those variables as I can related to my setup. I already have 66% of what I need to know to execute this trade. So I can speed up that process by being proactive, filling that in, having the self-control and the discipline to not click submit right away. And then if something changes or I need to adjust a number, it's a very easy, quick little 1-2 buttons or 3 little numbers that I have to change. So I'm constantly filling in, updating, managing my order window with the most up-to-date information so that when I'm ready to draw up my reference price, I have nothing else to focus on besides how is price action behaving in that moment. Understood? So if you're waiting for me to say that I'm looking for my entry here or watching here or give me a gentle pullback, and that's the moment where you're starting to fill in your order window, you're screwed, right? Because you're going to be rushing, chasing, hoping that something good happens. And there's like the dopamine and pressure and the cortisol that spikes, right? As you're making those decisions. So you can slow down and take control over those processes by being more proactive in how you're setting up your order window. What else we got here, guys? What else we got? So my targets, my profit targets, right, are these red lines. They are indicated to me by the indicator, or they're created for me by the indicator. Once I'm in a position, right, let's say that I jumped in, then I'm just judging each candlestick individually, right? So if I got in here, my exit would have been 29.070.75, right? Once it hits my profit target. If for whatever reason the move stalls or doesn't behave the way that I want, then I just turn that candle into a confirmation, right? So if my trade was strong, well, what would a strong trade look like? Well, it'd give me a strong candle shape, it'd give me a good volume profile, and we'd hold higher highs or hold lower lows. Right? So if I'm unsure what to do, I just go back to the habits I already have in play, right? Which is confirmation. And if my trade is strong, it'll give me that look. If it's not, sweet. And then if it gives me confirmation, awesome. I'll keep holding and I'll wait until I get that next moment of indecision. When I get that next moment of indecision, I will reset that process. I will wait for that candle to close. Once that candle closes, is it a strong volume candle, right? Is it a strong candle shape? Do I have, am I holding higher highs, right? XYZ. So it's the same process, same thing every single time. Not sure if I understand your question, Snook. Can you rephrase it for me, please? And DC, I would recommend on the DTR website, there's a video called Advanced Risk Management Techniques. That video goes over that process in a lot more detail. That is correct. The goal, right, is for me to be able to evaluate how good of a candidate you are to trade live capital. So if your objective, or let's phrase this a little bit differently, your objective in the short term, right, should be to try to keep your drawdown as tight as possible and to get as many payouts as you can as possible. If you have to have a $10,000 drawdown to make an extra $1,500, you're not really proving that you're actually a very good trader. You're more proving that your result or your initial outcome was luck, not skill. So we're trying to filter out people or traders or results that are based on luck so that we can actually scale you up and give you more capital to trade with. That's why we keep the drawdown tight and fixed. And realistically, if you need $10,000 worth of drawdown, there's probably other issues that are going on there that aren't necessarily relevant to your trading. Yeah, I'm working on that one, Greg. Truth be told, man, I know this kind of sounds maybe shitty, but it is a little bit low priority. Like it's important for me to get that fix and to create that for everyone, but I'm honestly just stuck in a queue of fixing other problems that it's not a just don't have time to do it effectively in the short term. I will try to get it done as soon as possible. But yeah, like honestly, like you could just upload your file to ChatGPT and it will convert it into a file that will be accepted by the DTR website. You could ask the AI coach to do it on the website. So there are a bunch of alternatives and workarounds and things that you can do. But yeah, I do understand that people would like that feature. I will try to get that done as soon as possible, but I also have to make sure that everyone has the trading accounts that they purchase or they have access to, or they're getting the payouts that they earned. And those currently are taking a larger priority over those little operational things. Well, my stop loss, Snook, is always going to be the high or low of my entry candle, right? I shouldn't say always, like 98% of the time, right? It's going to be the high or low of my entry candle. So if a candle dips and moves 10 points lower, and that's still my entry candle, well, it'll just be the high or low of whatever that candle is. It's always that. So my stop loss is always the high or low of my entry candle. And again, right, that process is the same for every single trade, in the same way that my setups are the same for every single trade, in the same way that my confirmation is the same for every single trade, because I want to avoid analysis paralysis, right? If I do a different thing each time, all I'm going to end up doing is confusing myself over what I should do and how I should do it. And when I start to confuse myself, then I'm more likely to make mistakes. I'm more likely to ignore red flags. I'm more likely to get greedy. I'm more likely to do all these things. And then from like a learning perspective, if I do the same thing on every single trade for 6 months, and then I study and look at my trading results, it'll be pretty clear and obvious what isn't working, right? Is it my entries that are constantly letting me down? Is it my stop losses? Is it actually my setup trigger? Whatever. But I need to get those variables to be consistent so I can start to notice the patterns that are costing me money. And the more and more I practice on being consistent in those patterns, then the less I have to think, right? And get in my own head and be like trying to outsmart the market, and I can just trade and react to the price action that's in front of me. And that's the thing that I think frustrates me sometimes, because I do the same thing every single day, right? It's the exact same process every single day. And too many people look for things to be different, or they're trying to find like some smart excuse or sounding reason to do something differently. And then they just confuse themselves for no reason whatsoever. So the number one rule of systematic trading is that you don't break your rules. And if you don't break your rules as a systematic trader, well, that means you're doing the same thing every single time. All right, what else we got here, team? Final call for questions here. Final call for questions. Tomorrow, we're going to do another one of these sessions, right? We'll do it in the evening because I know that there's desire for that. And then we'll see what people want, right? So we'll ask again in the chat tomorrow what time people want to do, and we'll do that time. All right, team. Well, if no further questions, I'm going to go enjoy the rest of my afternoon solving your tech issues. Have yourselves a great rest of the day, and I'll see you guys tomorrow.